tip, do your lot walk. No, I want to give you insight on what we're seeing the current market at right now and where it is headed. And again, this is going to be stats that are given by Black Book Wholesale Metrics, Google Shopper Indexes, our hundreds of dealers, 2-week sale rates. I'll give you that data here in a second. But one of the things I do want to share with you is we do have a cool used car event. It's free. It's going to be in downtown Chicago at the cars.com facility. Okay. Now I'm going to share my screen here and give you some information on the lineup here. Let me do this. Go ahead and we're going to share this one right here. We're going to have Brian Kramer there. We're going to have, of course, he's talking about, acquisition appraisals and service lane acquisitions and appraisals and, the whole appraisal process. Myself will be there. Obviously, we're going to go deeper into used car management, but lead management in correlation with that and how they should go hand in hand. Bert Davidson, again, we're going to be talking about private party acquisitions, buy plans, and building out buying centers and service lanes. Ed French, basics of used car operations. Okay. We got Doug Miller there. And of course, Alex Vetter from cars.com giving us their insights on current market values. If you just go to ucpalooza.com, it'll take you right to this page here. But let's go ahead and get into the stats. Oh, that's next Tuesday. The other thing I want to talk about on this event, again, the agenda's down here. We're starting at 10 o'clock and ending around 4 o'clock on a Tuesday. That's important. I wanted to do that on a Tuesday because Monday I wanted you to be able to get into your dealership, get the weekend wrapped up, get your week started. And worst case scenario, depending on where you're coming from, you could fly in Tuesday morning because we don't start till 10, and you could fly back out Tuesday night and not miss much of the dealership time. So try and make it as easy as possible. It's going to be a great event. All right. So here's the things that I want to go over. Now, there's 4 metrics here that I've taken and combined everything for you to take a look at. One is going to be things like the shopper indexes that we track and trend from Google of people shopping and looking for used cars. Okay, I've gone over this metric and these trending numbers in other videos. I could dig deeper if you need me to, if you'd like. But those metrics I've tracked for almost 10 years, and they're pretty steady. Then there's these insight reports that Black Book does. Okay, each week they take it out. They look at from there. A couple things that I grab is kind of the used retail days to turn estimates. If inventory is sitting or not. And then the other number I look at is the sale rate. Okay, and what is the sale rate at the wholesale numbers? All right. So I take those 3 indexes. Again, where's the average age of the retail used car from Black Book? I take a look at the 2-week or the sold, what's been selling at the lane, what the sold percentage is at the auction lane. And then I also take what our dealerships are doing. We track each week what our dealers are doing in their 2-week volume, what percentage of their inventory they sell in 2 weeks. And put that all together, and I threw it into this chart. All right, now this chart actually goes back to 2020, where we've seen the COVID shutdown. And I will go back into these Google Shopper Indexes. This goes back 5 years, which will go back to 2018. And the reason why I want to show you this real quick is what we're going to see here soon. So you see where in 2018, there was a little bit of an uptick in August, but pretty much within the next month, that shopper index drops down through December. Always picks up February, March, a little bit uptick in July, August, but not to the peak of tax season. And then again, drops down through December. COVID shutdown happened, and this is kind of where we're picking up on my other chart. But pretty much right after August, shopper indexes starts slowing down going into the end of the year. So again, that's in the next 30 days roughly. So that's where we pick up here, COVID shutdown. Now I'm going to look at shopper index. Again, this red line. So June of 2020, that shopper index was on a 100 scale. It was at 99. And then again, it just dropped down all the way through December of 2020. 2021, you got a peak in that March, April range. But if we look at May, June, July, this red line here, July 17th was at 83%. And look at the red line just dropped down all the way through December. Okay, you get back up to 2022. Okay, now if you go to 2022, around July 23rd, The red line kind of peaks up. But guess what happens after that? It drops all the way down through December. So I just showed you 5 years in a row, pre-COVID and after post-COVID, what the market does. Okay, and I've been tracking it for 10 years. So I can tell you, not just over the last 5 years, it's been that pattern forever. So where the shopper index is right now is at 54. So I'm asking you, where would you assume that this shopper index or market's going to go? It's going to continue to it might peak up a little bit in August, maybe as people get back to school and kids go back to school, and we need to start, maybe replenishing our cars for that commutes of work and school and so forth. Maybe we get a little bit of an uptick, but within 30 days from now, it definitely probably starts dropping off. And in those December ranges, if you look at last December was at 42. Previous December 2021, it was down at 51. Previous December was at 56. My point being is we're at 54 right now. So we're pretty much at that valley of the December shopper indexes, and we're not even past the summer yet. So I'm just curious of where this is going to end up. So that's going to go down unless some odd thing happens. And I did a prediction last week where, again, I don't know if it'll happen or not. I was just throwing it out there as hey, I wouldn't be surprised if this happens. And that was kind of a cash for clunkers thing that the government might do. Check out my last video, did that. All right. With that, let's look at the retail days to turn. As the as the shopper indexes slow down, okay, it takes a couple months. All of a sudden, by October-ish, average age creeps back up through those winter months, and then it starts dropping back off in that tax season. So again, we get back to this point back here where if you look, 2021, the average days or retail days to turn was at 35 by September, because obviously June or July and August things start slowing down, and then it starts creeping back up to 45 days going into the tax season. So where are we at now? So if the average age starts creeping up 30 to 60 days after things start slowing down on the retail end, right? Cars all of a sudden are starting to sit after the shopper activity drops off through August and September and through December. We're already at a 52-day average day to turn. Okay. So if this shopper index drops off, meaning less people are looking for used cars, which again traditionally happens year after year after year after year, if that continues this year, and then after 30, 60 days of the shopper activity dropping off, the cars are starting to sit and it gets higher and higher. Again, we're already at a 52-day turn. Okay. That is, and just in the last couple of weeks, it's been up to 55 days. The highest we've seen, okay, it's 55 days. That's higher at 53 days, or as high as after COVID shutdown. Remember, everybody was in their basement, cars started sitting, and we couldn't do anything. So if we're already at that level, what is the used car retail turnage? It's going to be creeping up even higher because, again, there's new cars, there's new car incentives happening, there's going to be a new car summer sales events, sell-a-thons going on. That stuff is happening. The OEMs projected numbers, the SARs are going up. They're starting to see their volume. That means there's going to be more trade-ins coming in. Okay. Now, let's also take that and mix that with the what's selling at the lane. Okay. The wholesale sold is at 46%. Okay. Now, this is the blue line. This time last year, in May of last year, 73% of what was getting pushed through the lane got sold. Okay. That's in May because, again, we have a February, March, April tax season. Everybody goes to the lane to replenish. That's why in May, we still have a high sale rate as people are replenishing. And then last year, wholesale sold percentages drop going through December. Okay. Same thing. COVID shutdown. You go back through here in June, everything starts selling because, again, we had that late push in the year as people got back out. and then what sold at the lane dropped off to 50%. What sells at the lane picked back up in that April season of 2021 as tax season was happening, had a little bit of an uptick of more car selling in October, and then again it drops down through December. My point being is you can see even the what's not selling at the lane is increasing. So again, 46% of what hit the lane last week sold. So 54% were not selling. Where were we this time last year? If you go back here, we're at 66% of what's going through the lane was selling. So we're down 20% of cars not selling through the lane, and there's more cars at the lane. So there's going to be, and they're going to continue to be a higher availability of these used cars. Because there's going to be lack of shoppers, there's going to be trade-ins on new, and all of a sudden, hopefully, if the floors start dropping at the lane, more and more cars get bought at a cheaper volume. Now, let's add to that caveat. What are our dealers selling in a 2-week window? And again, I would argue we have some of the best dealers in the country, and they're going to run really clean. A matter of fact, if you look back here in March, our dealers were selling 59%, almost 60% of their inventory in a 2-week window. They're selling 60% in 2 weeks. That puts them on pace to sell 120% of their inventory in a month. And right now, they're running in the 44, 45% sale rate. This week, it was 46%. That means they're going to sell 92% of their inventory. They got 100 cars in stock. They're on pace to sell 92. So their volume is down quite a bit. Now, almost staying clean. Most of our stores, on average, if they're carrying 100, it's pretty much selling 190 to 100. But again, that has dropped off significantly from the peak in March. Okay, this time last year, if you look at our dealers' 2-week sold percentage, okay, going into July, August, it was at that 45, 46 range. Kind of look at what happened going to the end of the year. Okay, dropped to 38%. It drops off. Shopper indexes drop off. Our dealers' volumes drop off. What happened last year? Again, it just stayed steady or kind of dropped off, but stayed in that 40% range the rest of the year. Carried 100, sold 80. So all indications will tell you, okay, these numbers are telling you. Let me go ahead and do this. I'm going to stop sharing my screen. Would indicate that we're heading into the next 30 days, a slowdown. Okay, next 30 days, I think it slows down even more. That means it takes 30 to 60 days for the market to adjust to that slowdown. And so you're talking September, October range where you really start seeing that big shift. That's when I really want to be able to be a buyer. Not saying, hey, I'm going to go bulk up on cars. I just want to be able to be a buyer in that market where I'm buying that car $1,000 or $2,000 cheaper than I could have 30, 60, 90 goes. And I get to price mine competitively with the dealers that have their age cars. Why they're losing $1,000 to $2,000, we're making $1,000 to $2,000 because we're a buyer in current market conditions. That means the car that's 1 day old right now is going to be age car in September or in October, right? So you're going to want to keep this inventory clean. As good or bad your inventory is moving right now, if it's moving pretty good, keep that going. Keep the age away. If it's already slowed down and you already have an aging problem, it's going to get worse over the next 60 days. Again, unless some curveball happens that the government or the market does, we're going to go through traditional patterns that we do every year. And so that seasonal adjustment's going to be already starting right now, essentially. And I did a video, look it up. It's talking about managing in twos, manage your used car inventory in twos. Again, what I mean by that is if I want a 60-day aging policy, that's a 2-month window. So I'd look at my 2-week sale rate, times that by 2 to see what kind of inventory if I sell them 50 in 2 weeks, that puts me on pace to sell 100. So have my inventory there. Okay. Any car I own today, that 1 day old car, 60 days from now or 2 months from now, it's going to be aged. So think about the position of that car then, the 1 day old car, what's going to look like in 2 months from now. Check out that video because again, we're in that 2-week phase or 2-month phase where things are really going to shift and probably in the wrong way if it follows every pattern of the year. Again, this isn't my opinion. These are the stats and these are truths that we've seen over the market. What is not true is I can't predict what's going to happen over the next 60 days. I always speculate based on what we've seen in these patterns. So make sure you're staying on top. So to wrap it up, stay lean and clean, obviously, and stay on top of your leads. Every lead that you get is an opportunity. You want to stay on top of them, make sure you're working them. Active leads on sold cars, switch them to other cars, and make sure your follow-up's happening based on issues on your lot. Not necessarily the age of the lead. That's where LotWalk can come in and help you. Check out lotwalk.com for that. And again, use Carpalooza. It'll be next Tuesday, downtown Chicago. Awesome facility at the cars.com headquarters, downtown Chicago. It's a great event. It's the second time we're pulling it off. So check that out. Love to see you there and give you some more insight on how to manage leads based on inventory issues and not based on the age of the lead. Hope everybody had a great 4th. See you next time.